Welcome to Money Talks. 2010 promises to be a year of ups and downs. In the coming weeks, we're going to be talking about savings, investments, stocks, bonds, gold, silver, how you can hold on to your money and protect your assets. I speak to people all over the world who are very anxious about their assets, their pensions and their financial security. We're going to see vast fluctuations in the stock markets, in the housing markets, in the automobile industry, in technology, in the banking and financial sectors, in governments, and in international trade and currencies. And 2010 is just the beginning of these major changes. More and more people are starting to question whether their investments are solid and how they can best protect their assets. For those of you who feel you don't have assets to protect, you might be very surprised. Most people think of assets that need to be protected as millions or billions of dollars of pounds or euros or yen. The truth of the matter is that however much money you have, be it $100 or $100 trillion, they're your assets. And because they're your assets, you need to be looking for ways to hold on to them and hopefully to make them grow. With so many people being affected by the downturn economy, and many having either lost substantial sums of money in financial institutions, banks, stocks and shares, or had their funds frozen, or had to take 60 cents or less on the dollar, it's very difficult to know where to put your money and how to keep it safe. After all, if the banks didn't know how to look after our money, and they're supposed to be the experts, who can? In the old days, you used to be able to put your money into the bank, and you knew it would be safe as houses. Nowadays, with banks having behaved so irresponsibly by lending to people who were not creditworthy, some were even on unemployment benefits, by lending them up to 100% or even more of the value of a property, and yet paying themselves millions if not billions of dollars in bonuses. This is one of the reasons why we're in such a serious global financial crisis. So what are the various options available to you? Let's start with the banks. What are the advantages and disadvantages of leaving your money in a bank? The advantages are that you don't have to hold cash on your person or in your home where it might be stolen or destroyed. For example, I knew an old man who used to sew his cash into the hem of the curtains in his house. He thought this was safer than having all his money in the bank. Unfortunately, he had a fire and the curtains with all his money inside went up in smoke. So if you are storing cash, try to put it somewhere where it won't easily be discovered or damaged. With a bank, you earn at least a little interest on your money. However, with most countries on very low interest rates at the moment, you might be lucky if you earn 1 or even 2%. By using the bank's credit card and debit card facilities, you have the flexibility to buy goods online and by telephone from anywhere in the world. You wouldn't have that freedom if you didn't have a bank account. There are several disadvantages in this current economic climate. Governments around the world have stepped in to guarantee bank deposits. And this means that should a bank get into trouble and be unable to continue trading, the government will bail it out so that it doesn't collapse and you don't lose all your money. This has already happened to so many financial institutions. In the UK, Northern Rock had to be rescued. In the US, Citigroup, Bank of America, Morgan Stanley, Wells Fargo, IndyMac, AIG, to name but a few. However, given the volatility of the world economy, there's no ultimate guarantee that governments will be able to fulfill their promise to rescue all the banks that might need help. So I advise you to spread your money around different financial institutions. At least that way, you don't have all your eggs in one basket. Remember to trust your intuition if you feel that a particular bank is unstable and take your money out immediately. Quite a few banks are persuading customers to tie up their money for a year, 3 years or 5 years or more in a term account or a CD. This generally pays a little interest more than if the money was immediately available. However, before doing this, calculate exactly how much extra money you'll be making and whether it's worth the extra risk. When is your interest paid on the deposit? Do you have to wait until the end of the term, or is it paid on a monthly basis? What happens if interest rates go up and your money is tied for several years? Will the bank increase the rate, or could you be stuck on your original lower rate? Let's say you go in at 3% and you've taken a 5-year term deposit or CD with the bank. It might be worth your while to withdraw your money and take the penalty and then reinvest at the higher interest rate. So to summarise, the advantages of using a bank are that you don't have to risk holding cash. You earn some interest on your money. You get debit and or credit cards, which give you flexibility. The disadvantages of using a bank are that in this downturn economy, not all banks are safe. Government guarantees may not be honoured. So tips are, try not to tie yourself into any deals, even if it means you lose a little bit of interest. Trust your intuition. If you don't feel safe with a particular bank, take your money out sooner rather than later. Don't go away. I'll be back soon.